Crypto in Africa, Crypto Continent in the Making. Together with our visionary experts, let's discuss how the crypto community is evolving in Africa and what are the unique opportunities and challenges. Please welcome on stage our moderator, Alexander Belov, founder of Cointelegraph, who will introduce his panel. Welcome.
Hello guys, it's a big pleasure to be here in front of you. It's already my second time in Africa. I was attending crypto conference in Kenya like half a year ago. And I was very surprised with crypto adoption level in Africa in general. So it's very interesting for me to attend this event and discuss this interesting topic with our speakers. I would like to tell a bit more about me and my way in crypto. I started in 2017 from cryptocurrency mining industry. We were producing immersion cooling installations for mining. And then I turned to crypto investments and we created our fund, investing starting from ICO wave in 2017. Right now we invest in DeFi protocols from different countries, and Web3 is the most interesting space for us. I also produce our Bitcoin documentary film. We visited El Salvador, which was the first country in the world to adopt Bitcoin as a legal tender. And there is another example of Central African Republic, which implemented a law that Bitcoin is also a legal tender in this country. So it's already second case in the world, and it is African country. So guys, I also write in Forbes about it, but I already speak too much, and I would love to give opportunity to our panel, to my colleagues to introduce themselves. So please start, Alice.
Yep. Thank you, Alex. My name is Alice Tomdio. I am the Chief Financial Officer at Yellow Card Financial. Just a little bit about Yellow Card Financial for those who don't know about us. We are a Pan-African cryptocurrency exchange. We are operational in 16 countries in sub-Saharan Africa, across East, West, Central, and South, including South Africa. We have been operational since 2019. Now I can't say it's most recent, but we are the #1 cryptocurrency exchange in terms of geographical presence and funds raised. We closed our Series B last year, where we raised $40 million, and bringing our total funds raised to over $55 million. And essentially, our platform is a traditional platform. Think of us as the Coinbase of Africa. So we provide a platform where individuals and businesses can buy and sell crypto. And we're layering on more products on top of that, just based on what we're seeing the use case for crypto being on the continent, which I guess we'll talk about a little bit more, but essentially payments, savings, and remittances. That's us.
Please proceed.
Sure. My name is John Lombela. I'm actually originally from the Congo. I've been here in South Africa for about 20 years now, and I feel like I'm part of the furniture. I'm a tech guy, a software engineer, and with a deep love of blockchain technology. I'm actually a 3-time founder and the CEO and co-founder of Axalio, which, by the way, stands for African Exchange and Liberal Investment Opportunity. So it's not an exchange platform like you guys. But essentially, it's think of it as a digital banking platform that has at its core the tokenization of true stores of value. Things like natural resources, gold, cobalt, and lithium, particularly gold, cobalt, and lithium, two components that are currently shaping the future of the electric vehicle industry. But you can also think of the agribusiness or anything around carbon credit as well. So we are bringing these commodities on chain to give an opportunity to the African people to take part of what we do believe is the massive wealth transfer around the world. I do believe that crypto is not just about trading these digital assets, the NFTs and all that kind of stuff. That's been the proponent for a very, very long time. But we focus on how we can leverage the blockchain technology and really bring to life some of the use cases that are tailored for the African continent and the African market, so that each and every single one of you guys here can have, for the first time, an opportunity to get access to things you never had access to before. I mean, if I would probably ask you guys, how many of you guys have been able to invest in cobalt or gold, chances are mostly none of you have been able to do that. And through Axalio, we want to be able to give that opportunity to everybody to make that happen. And we can only do that in a decentralized fashion, leveraging the principles of blockchain and DeFi and a variety of other things that will give you those privileges. Thank you.
Good afternoon, everyone. My name is Chris Becker. I'm a managing executive at TymeBank. Bit of context and an introduction to TymeBank if you don't know it. We're a bank based in South Africa. We also launched in the Philippines last year. In South Africa this week we should exceed 7 million customers, and we're only 4 years old. So we're very excited about the rate at which we're growing and how the business is built. We got the first banking license in South Africa since 1999, since Capitec basically, and we're also the first bank that runs purely in the cloud. And so we've got a business model and economics around our business that makes it possible for us to bank a special grant recipient receiving 350 Rand a month in South Africa profitably, which is a game changer in banking, and we're very excited about replicating this business model around the world. But why are we here to talk about crypto? Well, we're a new kind of bank. We're a digital bank running in the cloud, and we don't have preconceived ideas around which technology systems banks should be utilizing and offer to deliver value and services to their customers. So we're very open-minded about this space. My journey in crypto has been since 2016 for a big bank in South Africa. I built digital asset custody, went through the SARB's regulatory sandbox where it was approved for launch to market, but I'm very excited about being at TymeBank, which is a very different kind of bank.
Thank you so much for introduction, guys. So let's start the discussion about crypto in Africa. And my first question would be general. So what do you think about the trends which are going on here in Africa with crypto? And the most important is the adoption. What do you think about the adoption of crypto in Africa right now? Let's start from you.
Yeah, sure. I can start. I think on the adoption side, perhaps I'll make one point, which is around the statistics, and we can move on from there because it's quite obvious. And then perhaps the trends that we're seeing, a couple of points on that. So, I mean, there's a lot of information out there. The beauty of crypto is you can go on chain and see the adoption across the world and where the flows are happening. And globally right now, Africa is the number 2 fastest continent after Asia in terms of crypto adoption, which really is a great thing that Africa is leading in this space. Probably before crypto, mobile money was where we adopted pretty quickly. We have about, 53 million crypto users in a very short amount of time. And that's about like 16% of global crypto users, which is around 320 million. And to put that in perspective for a very young industry, the banked population right now, and Chris, keep me honest here, in Africa is about 450 million, right? Telco subscribers in Africa is around 500 million. So for crypto to have gotten to 50 million in such a short amount of time tells you that it is being used for actual tangible purposes, not just, speculation, which is what you see in the global north. People are using crypto. Young people who previously have not had access to global capital markets are using crypto to take advantage of arbitrage opportunities, right? Not necessarily speculation. So they're trading in crypto. People are using crypto for payments within Africa, across borders. We're seeing that on our platform. People are using crypto to send money to their loved ones. Sending money to Africa is the most expensive globally on a fiat rail, 9%. Crypto is less than 1%. So people are using crypto for remittance. And lastly, savings. In the absence of volatile currencies, all right, which I think will be hard for African markets, people use crypto as a storage of value, right? We've seen the Naira depreciate over 4x in the past 5 years. The Rand, unfortunately, 30–40%. So people now are using crypto, particularly stablecoins, as a form of preservation of their wealth, right? So I think that's kind of on the adoption side and the trends that we're seeing around crypto.
I just want to add on that. I think when it comes to that specific question, it's important to understand one thing. Africa is about 54 countries, right? And the adoption, from my perspective, the adoption of crypto has been a little slow, but yet steady. There's only about 4 countries because of the stability of their economy. You look into Nigeria, you look into South Africa, you look into Kenya, potentially Ghana. These countries are fast adopting that, right? But if you look into South Africa, the adoption of digital assets, particularly Bitcoin and Ethereum, has been made on the premise of network marketing at first. So people flock around these things because, especially here, there's an opportunity to make money. It's not necessarily about the underlying, sort of use cases that are solving real problems. That has evolved. We have a lot of startups that are now, for example, using stablecoins to do remittances and so forth. But there's a bit of a concentration into Nigeria, Ghana, and Kenya, where this is working fine. You go to Morocco, crypto is banned in Morocco, right? You go to Zimbabwe, for example, they started an exchange back in, I believe it was in 2015, Golix, 2015, 16, and 17, and got banned because the central bank just didn't realize that they didn't have the piece of the pie, purely because they didn't understand the market. And now, guess what? They're looking to develop a token backed by gold that will represent the currency in Zimbabwe. You go to Uganda, yes, there's been an attempt to really onboard that. And by the way, Binance was the first to come in Africa through Uganda. And now you look into Central African Republic, where the president of the country is at the forefront of the innovation with a project called Sango Project, allowing, sort of promoting the country through the natural resources. Once again, that's, for me, is a beautiful use case where investors can come into the country, tap into these resources, but now really deploy capital to build infrastructure, solve problems across many different verticals, okay? Healthcare, agriculture, mining, and real estate, you name it. And eventually, to also help develop that particular nation. You go to my home country, once again, people have used crypto because there was a money-making opportunity. The money-making opportunity has introduced a lot of frauds and scams. And I think this is the issue why adoption is, sort of, it goes high because people want to make money, and then it drops because there's a scam, there's a rug pull. And now we're watching over, okay, what is the regulator going to say so that folks can actually come back? We have a lot of work to do in this space. Africa is 54 countries. It's not just about only the top 4 that seem to be adopting crypto in general.
Very good answer.
Say that again, sorry? Yeah.
Yeah, I think to add to all of these points, the challenge with Africa's economic development and capital accumulation in the last century has really been government and political and policy regimes that are constantly changing, and central banks that have enforced terrible policy that causes devaluation of currency, and the citizens are just trapped and they've got no way to store savings and value in a system that can protect them. And so the exciting thing about crypto is it separates money from the state, and it gives the people the power to protect their wealth for themselves, but also for the next generations, which is such an important piece of a financial system and an economy. But the challenge, of course, has been, who do you trust in connecting to this thing called Bitcoin? Because Bitcoin's a complex thing to try and, own and hold yourself if you're running a node and managing your own public-private key pair. So you need to still trust someone, which is where it's important for a business like Yellow Card to be positioned. a business that you can trust with your Bitcoin in order to connect you to the system, but can also give you the option to be protected from your state. And so I think from a big picture perspective, this is what's so important, and it's the power that crypto introduces to Africans. And it gives Africa the opportunity to kind of leapfrog into a new financial system where, more established economies, banking systems connected to SWIFT and Visa and MasterCard, it's far harder for them to kind of make this adjustment. So that's why Africa, I think, is so exciting.
Yeah, we already discussed it a bit, but maybe you have something to add. What are the main advantages which cryptocurrency can give African continent right at the moment? What are the opportunities for the people? It's a bit obvious, but maybe you can add something, because this question is really important.
I'm in this space still for something that is very close to my heart. I've been in this crypto journey since 2012, when I first discovered Bitcoin, and really got both deep into it in 2015. And I do believe that the opportunities in this space are way beyond just trading Bitcoin and Ethereum just because you want to make a buck. We need to be able to really implement the promises of this technology and how it can help solve the problems of the global south. And if you look into the African continent itself, we often talk about banking the unbanked. We often talk about, sort of cross-border payments and remittances and lowering the fees. And technologies such as stablecoins are definitely a part of it. But for me, fintech is not just about payment. The majority of solutions in Africa when it comes to fintech, everybody seems to focus on payment. I do feel that there's so much more left on the table that can definitely help entrepreneurs identify new avenues, new business models, and help them create jobs and startups and companies that are solving these problems. And for us, we're focusing entirely on tokenization, and that's where I see opportunities. And how do we do that? If I take, for example, agriculture, right? And you can think, agriculture, okay, but how does the crypto, solve that particular problem? Well, the whole DeFi aspect allows us to implement, for example, a landing pool and a borrowing pool. And the landing pool, by the way, could be an opportunity for each and every single one of you guys here to earn yields or dividend based on the proceeds that the borrowers will be able to push through. Because now the borrowers will flock into these landing pools, or to be part of the borrowing pool, because traditional banks will make it so hard for them to get access to loans. Now, somebody who is in Soweto or in Mapopane or wherever, far out, who doesn't have a bank account, and by the way, even if you don't have a smartphone, you don't have to be on a smartphone to be able to tap into those loans that are provided through DeFi lending. Some of my friends, I don't know if they're here today, from Kenya, Kotani Pay, they have developed a protocol on the Silo blockchain, allowing the guys in Kenya to be able to borrow money through lending pools without having a smartphone. So this to me is a use case that we can really solve as a problem in Africa, giving an opportunity to agriculture. There's many agribusiness owners that want to tap into loans. We can do that. And imagine an agribusiness that has the potential to give you 15% yield as a return based on a proven business model. That's more than what FNB or any other bank can actually give you. I don't know about TymeBank though, but that's what they can do, right? And that's the opportunity in the crypto space. I can go on and on and on, and of course in the mining sector, gold, cobalt, and multiple other things, even in the whole carbon credit, right? So these are the different models that we can literally apply, and there's many opportunities that the blockchain can actually solve as a problem, not just the payments.
Elise, you want to add something?
No, I think John has has said everything that needs to be said. But I think the key point, I guess, to just really hone in is we can have a whole panel discussion about tokenization. I think that's probably one of the biggest benefits out of the entire Web3 world, tokenization and the power of the blockchain beyond the financial aspects, right? People are using blockchain in the, for example, in the shipping industry. Anyone who's worked in that industry will understand how, you have to get a Form M through your bank. You have to, like the whole process is just a cluster. And what the blockchain has been able to do, for example, in that industry. So I think beyond the payment space, the finance space, which is where we operate, and the things you can layer on top of that to solve people's financial problems, the technology itself on which we sit, which is blockchain, not so much tokenization, but the blockchain is super powerful. Yeah, and I don't think we've even scratched the surface. I think my son will have a very different experience with Web3 than I did.
I think if I can add an interesting disruption, introduce an idea of how I think blockchains, and specifically these smart contracts, also known as decentralized financial contracts, will disrupt banking, is that currently if you're a banker and you're going to extend credit, well, you need deposits and you need a balance sheet. You have to be a bank. But what these blockchain models introduce is basically a balance sheet that lives on the internet. And it means that essentially you can now, across Africa, because the internet's across Africa, you've got this balance sheet that spans the continent. And it's a global balance sheet. And so you can now have people who become bankers who don't have a balance sheet. All they need to do is understand these new decentralized financial smart contracts on Ethereum, for example, and understand the context of the local market and the people's needs, and they can start to intermediate credit. And so it means you start to unbundle the banker from the bank. And so what does this mean for the future? I mean, you can have people who are almost like, bankers, but they've got a social presence, they're influencers, which is exactly how you guys are positioning, right? So if people trust you in local contexts, you become the banker. Super exciting. I think it's going to be a big disruptor to banks. And to say, not all banks are made equal. Some banks understand this and are positioning for this disruption so that we can also benefit from it.
Yeah. We spoke about the opportunities and advantages which crypto can give us and help Africa for sure. But there is always another side of a medal, and there are regulators, and sometimes they don't give us opportunity to use the technology like we want to do it. So what are your thoughts, guys, on regulation problem here in Africa from point of your businesses?
Well, I don't know if we have a regulation problem. I think it's more about how do we engage with regulators to make sure that they don't do more harm than good, right? So I think regulation is super important. We, as a position, we are compliance first, regulation first, because it's important to protect the general public, right? So, but then you have situations like in the US where now Coinbase, for example, is, I think the CEO is right now in Dubai, right, trying to explore an international expansion because they're in a constant fight with the SEC, the court is getting involved, and it's almost in the way of the product and the good of what Coinbase and other crypto exchanges in the US are trying to do. So I think it's important for the players in the industry, like us, to engage with the regulators and to educate and to bring them to the fore and help them understand the benefits of this and how you can regulate without hampering innovation and without hurting the product. That's all I have to say to that. For any central banker in the room, regulatory, securities regulators, we want to talk to you. So I think it's important and it just needs to be done in a constructive way.
I think this is a very sticky environment regulation. First of all, it is important, but at the same time, it shouldn't hinder innovation. And it's important to understand the fundamental aspect of the blockchain protocol, or the blockchain technology itself. When the first blockchain protocol Bitcoin, run by the largest chain on planet Earth right now, came about. The whole concept about that was, you know what, it's a self-governed protocol and, you know, far away from central authorities and all that kind of stuff. So the question is, how do you regulate a protocol that is supposed to function based on a consensus algorithm, all right, that shouldn't be controlled by any third party? Now, my standpoint when it comes to regulation is the following. If you're having exchange platforms that are more on a CeFi or centralized financial model, those entities should be regulated. They should be regulated because they're custodying the assets, they're custodying the funds of the users, and they're providing all of these means to sort of help convey to the audience or to their users that, you know what, you're safe with us and all that kind of stuff, and they are responsible to sort of pay back the users if in the event there's something off going on. But the question is, how do you regulate a decentralized exchange? How do you regulate a decentralized protocol? That becomes very difficult. And that's why today we have, look, regulation is good to really foster that trust element from people who have gone too far away because of the scams. We need the regulators to establish certain laws around the use of digital assets. But also, it is our responsibility to foster education. We need to educate as many people as we can. And the folks like Yellow Card, the folks like TymeBank and ourselves and everybody in the industry, it is our duty and responsibility to educate the masses and talk to them about the benefits of digital asset and crypto, talk to them about the essence of blockchain technology, and ultimately also talk to them about the risks, because this is still a very new asset, extremely volatile, and tell them exactly that, hey, listen, it's not because you are investing today that you are going to be the next billionaire in Bitcoin. Everybody wants to invest $8 expecting that tomorrow they will be multi-millionaire, right? But if you don't understand the underlying asset, it is really, really going to be very difficult. So it's a fine line between the regulator and the innovators. What are you building? What kind of protocol are you building? Are you a CeFi or are you a DeFi? If you're a CeFi, definitely you have to go through the same laws as traditional banks. But if you're a DeFi, what part of that DeFi component do we regulate? Because if I deploy a self-custodial digital wallet, how am I going to regulate that, right? Especially if you control your keys and you control your asset. What I need to do is to teach you and show you how to control your private keys, how to safeguard them in the event, for example, you lose them. How do you really protect your private keys, but you literally are your own bank? So that's the nuance right there. And yes, the guys like Coinbase are, you know, it's a pretty large centralized exchange, and they have to go through the wrath of the SEC, and they're definitely feeling that today.
Cool, very wide answer. So Chris, your turn.
Yeah, the regulatory question's a very difficult one. I think the reason for that is because this is such a new technology and a new way of doing things. What typically happens in innovations like this, big technological revolutions, is that the market comes up with standards of how to do things. If we think of the internet as an example, the internet was first being built in the 1960s, and we still don't really have meaningful regulations for the internet. There's some principles that are becoming applied for certain types of businesses on the internet, but it's not fully regulated. Now we're trying to just regulate this new technology, which is decentralized and highly regulated in the way that it works, to John's point. Bitcoin is the most regulated currency on the planet, by far. Only gold maybe competes with it, because you can't change the chemical properties of gold itself. Same with Bitcoin, highly regulated. But what we do need to deal with as an industry is the people who intermediate, who give other people access to this technology, because that's where fraud and corruption can essentially come in, and people can get scammed. Yeah. And the standards and the principles of how to really do that with all of this evolving applications and new types of chains and smart contracts isn't hardened. So it's going to take a long time before the standards are really set in order for this to become regulated. So difficult questions, fingers are going to be burnt, mistakes are going to be made, but there are going to be certain standards and principles that win at the end of the day, and they're the ones that essentially become the regulations.
I mean, just to add to Chris's point, because I think crypto gets a very bad rap. It's almost like, 5 people in the room and one person is the loudest and suddenly it represents all 5 people, right? If you just look at the stats around frauds and scams, we hear it all the time. It's, I'm not on social media, so it's like if you see it, you always see it, right? I assume, again, because data is not really regulated, right? So if you look at the stats, again, of all the volume of credit card transactions today, 17% get chargebacks, which means maybe it was an authorized charge, maybe it was fraud. Who knows, right? For crypto, only 3% of crypto transactions end up being reported as either fraudulent or if you have you're sending to a wallet that's been banned or what have you. But we hear so much about crypto scams, it's almost like we think crypto scams per capita, right? Again, it's not absolute numbers. This is percentage of all transactions. Crypto actually has the lowest level of scams and frauds. So I think we also kind of need to educate, again, because everyone has their own agenda, right? I have my own agenda too. But if you just look at the pure stats, crypto has the lowest level of frauds and scams exactly because of the technology on which it sits.
Yeah, and we also should keep in mind that situation with Silicon Valley Bank and Credit Suisse. So, yeah, not just in crypto could happen this situation and any kind of bankruptcy. So,
in fact, that's where there's a lot more issues. I mean, how many banks actually have fallen so far? We got SVB, we got Credit Suisse, we got Signature,
yes.
Exactly. So there's a lot more corruption happening in the traditional financial system than there is in crypto, which is, by the way, highly, extremely traceable than it is traditional financial systems.
Yeah, absolutely. I'd like you to answer a funny question. You are based in Africa and you are so good on this market. And being a journalist and investor, crypto investor myself, it's quite interesting to know what are the hottest trends. Maybe you know some interesting projects, some fields to invest. And it's definitely quite an interesting question to the audience. So what do you think, guys?
I'll tell you one thing. Obviously, I'm going to be biased. You know that, right? So I don't believe that we haven't really tapped into the full potential of this technology, of blockchain technology. And I preach tokenization all the time. That's $1 trillion market opportunity right there. The CEO of BlackRock, which is one of the largest asset managers around the world, is predicting that by 2040 or something like that, or 2030, this is definitely going to be over $1 trillion market. And they are themselves considering tokenizing securities and tokenizing commodities. That's what we are doing. Now, if you're asking for a hot project right now, look no further than Axalio. We are focused on tokenizing true stores of value, commodities, and including the securities as well. Now, think about it. We want to bring you the opportunity to invest on a Tesla stock through our platform, being in South Africa, as we tokenize that particular security. That's an opportunity that we want to give to everybody here. And right now, there's very little of these opportunities making it happen to the market, and that's what we are tapping into.
Was the question top investment opportunities or what?
Yeah, on African market.
On African markets. So,
Yeah.
so sort of private or publicly held businesses.
Answer like you see it.
Okay. I think, well, in this space, for Africans, in my view, I'm not giving advice here, but my sense is, and it's a very boring idea, I think, is to hold Bitcoin, really. Bitcoin is 10 years into a 50-year kind of adoption cycle. These things tend to take around 50 years before it becomes widely adopted. Why Bitcoin? Because it's boring, it's not really changing, it's not very widely adopted. The supply is capped, it's going to compete with the market cap of gold, traditional currencies, stores of value. What we've seen in the last few decades, as central banks have manipulated interest rates, is if they've forced people out to take increasing amounts of risk, and they've broken the savings account. What that means is you can't store value in a savings account because inflation's higher than the interest you earn, except for TymeBank's interest rate. You guys should take that up. It's 10%. 10%. But seriously, in general, the savings account around the world is broken, and so people have had to take risk in things like real estate and equities and all sorts of stuff in order to try and preserve value. I think with an asset like Bitcoin now, over time, it'll be becoming increasingly recognized as a store of value through which you can store the value that you've earned through working to future generations, where central banks and governments can't essentially confiscate some of the purchasing power through inflation. So that to me is kind of still an idea whose time is yet to come. There's lots of mania and hype cycle around it, and there's obviously a lot of innovation that's happening outside of Bitcoin. But to my mind, in the crypto space, that's still a great idea.
Yeah, for me, I view it in two ways. My generation, me today, and my son, right? And those are two different worlds. I'll start from my son, which kind of comes off of Chris's point. Savings right now in Africa is a privilege. Many people cannot save. And even for those who can save, the savings are completely depleted, right? Inflation, I used to be in traditional finance and capital markets, very, very shallow capital markets. You can probably name 3 or 4 stocks in Africa that have yielded any returns for any Africans, equities, I mean, forget about debt. So for me, my son's portfolio right now, which is not very big, he's not 2 years old, is 50% US Treasuries and 50% Bitcoin. Not meme coins, not all the fancy coins that are coming in and people are going to jail for insider trading. Bitcoin and US Treasuries. And I'm actually curious to see, if I live long enough, to see which would yield him. As of today, his Bitcoin portfolio has outperformed his US Treasuries portfolio, even with the US government increasing interest rates, which is causing an uproar around the world. For me today, I use crypto for payments and for moving money around from the US, here, Nigeria, different places. I'm Cameroonian to Cameroon. I use it for payments and I get paid in crypto, right? So my form of currency today is crypto, and I'm using it as essentially a form of utility. If I was getting paid in Rand, trust me, I'm sure many people are, I would be very unhappy today, as I'm sure many people are. So for me today, crypto is solving a financial problem for me. For my son, I see now him in Africa, not in the global north, because there's a different economic situation there, where you have a middle class, you have people who are well off who can afford to save. So for my son, it's a form of savings, essentially.
Yeah, as for me, I have more than 60 cryptocurrencies in my portfolio, but mostly Bitcoin and Ethereum. Yeah, I was very interested to find some local interesting projects to invest, to take this advantage of being here and understanding this market as well. So guys, time is running out, and maybe we have some questions from the audience. Raise your hand if there are some questions to some of the panelists.
Good afternoon. My name is Yusuf. I just wanted to ask in terms of the backing of the cryptocurrencies like a Bitcoin. So we actually see, like as what you've been saying, banks like Silicon Bank, Republic Bank falling, right? But I haven't seen the movement in terms of Bitcoin to move drastically like the way we were expecting it. I was expecting maybe people that will start moving the money and start, putting the money in a Bitcoin itself. So to me, it gives me the sense that the reason why here in Africa, a lot of people, they're not paying attention in Bitcoin is because of they don't have the trust, or they don't have the backup to say that if a Bitcoin does this or drop, or if Elon Musk says something and then a Bitcoin moves from one position to another, what will back up my money if I invested in Bitcoin or if I save in Bitcoin? So another example, if my grandfather has so much money there, then I'm trying to convince my grandfather to put money in, or to save money in Bitcoin. What would be the backup when anything happen, in terms of like global financial people, when they say something and the Bitcoin moves, what would be the backup for that investment or for that savings in Bitcoin or in crypto?
I think. Look, you're talking about that from an investment perspective, okay? And I think you need to, but before you really allocate your fiat into an asset like Bitcoin, you need to understand it. I'll tell you what I normally tell people who don't have at least $100,000 today with today's price of Bitcoin. I tell them, listen, if you don't have enough, if you don't have $100,000 or more, don't even bother looking into Bitcoin at this point in time. But if you are a long-term investor, all right, then of course you can diversify and use Bitcoin as a sort of, an asset that you put your capital into. But here's the thing, I'm going to give you an example of, I don't know if you know this guy, Michael Saylor, all right? Michael Saylor is probably one of the most revolutionary guys in corporate America. Somebody who has, first of all, he was against Bitcoin and crypto for many, many years. Until about March 2021, when he started buying crypto at a price of $10,000. He continued buying crypto until last year.
Bitcoin,
Yeah.
Bitcoin specifically.
Bitcoin specifically. Only Bitcoin, that's what he does. He only purchased Bitcoin. And he purchased Bitcoin until, I think it was at $55,000 as well. But what happened at $55,000? The price peaked to 65, and then it went all the way down to 18. The question is, did he sell the asset? No, he didn't sell the asset. Does he believe in the asset? Of course he does believe in the asset, because he understands the digital properties of the asset. And he doesn't look into the now, he looks about into 10 years from now. What is Bitcoin going to be like 10 years from now? And in fact, even when the price continued going down, he kept on buying more. While the world went against him, he kept believing in the asset and bought more. As we are talking today, he owns over 140,000 Bitcoin in total. And he bought it on an average price of $29,000 in different increments. We normally call that dollar cost average, right? So if you are an individual who are looking to get into digital asset, understand exactly, first of all, what type of investor are you? Okay, are you a short-term investor? Are you a day trader? Are you a medium-term investor? Are you a long-term investor? If it is long, what is your long-term horizon? Is it 3 years? Is it 10 years? If it is short, what is your short-term horizon, right? And now, what is your risk appetite? Are you looking to put into Bitcoin, which is a highly volatile? And right now, Bitcoin has proven its worth, and it's not as extremely volatile as it used to be. Now, how much money do you have? And by the way, we always know the rule. Remember that when you invest, you stand a chance to lose all your capital. But when do you lose your capital? You lose your capital when you actually sell the asset at a price other than what you actually decide to buy into, right? Which is actually lower. And that's the only time that you actually lose the money. What do you know about Bitcoin for you to be able to put your money into it? What do you know about gold? What do you know about real estate? What do you know about anything? And that question is not only about Bitcoin. It's about any asset. It could be real estate too. You could buy a property today for 2 million rand, and 2, 4, 5 years later, it's actually depreciating. Why? It could be depending on, maybe there's too many shacks around that particular vicinity, causing your asset to depreciate in value. We always know that property normally appreciates in value, but the other way as well is true. It depends on economic circumstances. It depends on multiple things. So before you allocate your fiat money into anything else, understand what are you trying to achieve in a short, medium to long-term horizon. What kind of individual are you, and are you able to sustain the volatility? And if so, how do you measure against that? Okay, that's exactly what I would actually tell you without giving you the advice to choose a crypto asset to go ahead and invest.
Some more questions?
Alex, could I quickly just add a point to that question? So what's been happening in the US is small banks have been consolidating into big banks, and the deposit flows we've seen is scared depositors at smaller banks have moved their money to the big banks. JP Morgan's, Citi's, Wells Fargo's. So it's really liquid deposits that have shifted around to the safety of bigger banks. If it had shifted to Bitcoin, for the average man on the street, they're still taking price risk, right? You buy one Bitcoin, but it's worth so much today and more in a week or two. They didn't want to take that risk. So those are the shifts that are happening. Investors and smart money I'm seeing are now starting to, with this banking crisis, to understand the benefits and the value proposition of Bitcoin in the context of the banking crises worldwide. When you speak to somebody like your father or grandfather who's not going to want to put his money in because he's scared of the banks, it's likely to only we need to join that party out there soon. When you're thinking about the context of sort of elderly seniors, they're going to want to only move when a business who they trust give them access. So something that's interesting on this front, for example, is if you think of a business like Twitter, there are a lot of people who trust a guy like Elon Musk. Elon Musk has already outlined his payment strategy, and he's applying for payments licenses. He's already starting to KYC people with Twitter Blue. It's not going to be long, and he's going to integrate crypto as a payment rail onto Twitter as a platform. Then suddenly the environment changes very quickly where someone says, well, we trust Elon Musk, we trust Twitter, we're going to start getting into Bitcoin, and it becomes an alternative.
So the question? Yeah, I think it should be the last question because we are short of time.
Hello, my name is Samuel Elanga. So I have two questions. The first question is for Yellow Card. So as we say that Africa is the second leading continent in terms of cryptocurrency, but I realized that a lot of people in Africa, they have crypto, but they lack education. So for Yellow Card, do you guys have a platform that provide education, Because I remember one day somebody was saying, I have this thing, it's called Yellow Card. He thought like they will give him the yellow card, He has been waiting for a yellow card, but he never got one. So he doesn't even know that it's a exchange platform, So do you guys educate people about it, Because as we can see in Africa, we say that we're the leading continent, but mostly only 4 countries that are leading, Nigeria, South Africa, Kenya, and maybe like you say, Ghana, but the rest are still far, and some of them are still having crypto, but they're just having it in terms of network marketing, buy this and get this. And my second question is about the stablecoins. With what is happening with the USD dollar, where some people are saying that it might no longer be the world standard. If it happened, so what happened with the stable coins? Even though there are other stable coins that is not backed up by the US dollar, but those ones that are, what happened to it?
Amazing questions. To answer your first question, yes, Yellow Card Academy. It's probably our most prized possession. For anyone who's a pure capitalist will know that one of our missions is to bring crypto to every single African on the continent, which is a very, very expensive mission. I wish we were like TymeBank and we could digitize everything and every customer cost us like very little. But part of our mission is to bring crypto to the continent. And I think for some of us everyone who's in the crypto space today is an early player. And I think we have no option but to do that, right? Which is costly. So that's a big part of our strategy, which we know is a money-losing strategy, but it's important for the mission and it's important for the industry. So Yellow Card Academy, check it out. We have activation events. We are like guerrilla marketers. We go on the ground and we take the time to educate people about crypto, not necessarily about our product specifically, but about crypto. And I think Yellow Card Academy does that. So that's the first. Second question, when you're in a business like ours, you have to listen to your customers and you have to apply some level of diligence and, protect them in a sense and give them what they ask, right? So for example, in our platform, we only offer a certain number of coins, right? And every coin goes through a diligence process that ultimately has to be approved by our board. And our board are all crypto investors, right? Like the crypto-focused investors. So between our compliance and risk committee and the board and even the product team that bring coins, there's a lot of diligence that goes into it. But of course, we didn't have Luna, for example, on our platform, right? But we know what happened recently. USDT lost its peg for a little bit and came back, which I think is actually very good because it shows you that it was tested. If it was a traditional banking system, you never would have heard anything the entire weekend when this whole thing with Silicon Valley Bank was going down. So to me, the silver lining in USDT losing its peg and coming back is I trust it more, right? We can go into the details of how that happened, why it happened, and why that's a good thing, right? But I think for us and the coins we offer, ultimately, we are humans. We apply judgment. Hopefully, you have a lot of people applying judgment, and we try as much as possible to offer coins to our customers that we believe are good coins, have the right governance, at least, and are sitting on really solid, on a solid blockchain as well. So that's what I would say on that.
Yeah, so thank you so much. I hope it was an interesting panel discussion for you guys. And hope we see you more on crypto events. Thank you.